This is why whales are not buying Apro coin right now. And honestly, if you look closely at the data, the charts, and the psychology behind the current market, it starts making a lot more sense than people think. Everyone keeps asking, why is Apro dumping when it just had its big WEX listing? Why aren't the big wallets stepping in to scoop the dip? But the truth is much deeper than just price action. It starts with what the charts are screaming. The live price data doesn't just show a dip. It shows a steady, painful decline across 24 hours, 7 days, and even 30 days. When you zoom out, Apro isn't correcting anymore. It's sliding. And when an asset breaks its structure in multiple timeframes simultaneously, whales don't see discounts. They see falling knives. And whales don't catch falling knives. They wait. Now look at the technical indicators because this part is wild. Apro's RSI for the 7-day timeframe isn't just low. It's sitting around 13.68, which is basically the market waving a giant red flag saying, everyone is panic selling. When the RSI sinks this deep, it usually means the price is far below fair value. But it also signals that the selling pressure is emotional, not strategic. Whales hate emotional markets. They prefer calm, predictable accumulation zones, not chaos fueled by fear. And speaking of structure, Apro didn't just break its Fibonacci retracement levels. It fell under key support zones that were supposed to trigger a bounce. Instead, it sliced right through them. For institutional-level buyers, that's a sign that the current support levels are unreliable. When support becomes unreliable, accumulation becomes risky. And that's something whales avoid at all costs. But let's talk about the hype cycle because this is where most retail holders get confused. People don't realize that when Apro got listed on WEX exchange on November 5th, that was its biggest bullish catalyst, and the market already priced that in. The surge that happened immediately after, that was the listing pump. After that kind of pump, there is always a correction, always. And because the broader crypto market right now is swimming in extreme fear, the correction didn't just stop at normal profit-taking. It spiraled. Bitcoin dominance went up, meaning liquidity flowed out of altcoins and into BTC. This is textbook behavior during risk-off conditions. And in times like this, whales prioritize safety. They're not looking at Apro and thinking opportunity. They're thinking unnecessary risk. But here's the part the community doesn't want to talk about, the security concerns. Some tweets floating around mention that Apro's freeze and mint authority might not be renounced yet. And whether or not that's a real threat, it doesn't matter. What matters is the perception of risk. Whales don't wait to find out if something is true. They react the moment doubt appears. When there's even a hint of uncertainty about token control, whales step back and let retail fight it out. And because the trading volume has dropped over 75%, liquidity is drying up fast. Low liquidity means whales can't enter without moving the price dramatically. They don't want to pump your bags for you. They want the chart to be stable enough for them to slip in quietly. Right now, Apro doesn't have that kind of depth. Then there's the Pi-verse partnership. This news should have boosted sentiment. Cross-chain compliance is a huge feature. But here's the issue. The market had already priced in the bullish potential before the partnership was even fully understood. And in the middle of a fear-driven market, good news loses power. Investors expect immediate price movement, and when they don't see it, they assume the project is weak. Whales think differently. They watch how retail reacts to news. And in Apro's case, the partnership announcement didn't trigger any strong reversal or major accumulation. That tells big money investors that the hype is losing strength. When hype dies before utility kicks in, whales wait on the sidelines. And let's not forget the giant shadow looming over everything, the macro environment. Bitcoin dominance rising, altcoins bleeding, liquidity evaporating, fear dominating every index and every social chart. When Bitcoin is strong and altcoins are weak, whales buy Bitcoin, not small-cap tokens with unstable charts. They know a liquidity crunch can drag even fundamentally strong tokens down another 20 to 40%. And right now, Apro sits right in the danger zone where market fear is louder than fundamentals. Put everything together, the oversold indicators, the broken technical structure, the post-listing correction, the partnership that didn't spark momentum, the concerns about token authority, the massive drop in trading volume, and the fear dominating the entire crypto environment. And you get the exact reason whales are not touching Apro at the moment. They're not bearish on the project, they're bearish on the conditions around it. Whales don't chase green candles or try to predict exact bottoms. They wait for stability. They wait for consolidation. They wait for confirmation that the worst is over. Right now, Apro hasn't given them that confirmation yet. The price is still searching for a true bottom. The market is still afraid. The liquidity is still thin. And the sentiment is still shaky. Whales are patient. They don't buy because a token is cheap. They buy because the environment is right. And for Apro, that moment just hasn't come yet. But when the fear fades, when the technical structure rebuilds, when liquidity flows back in, and when the market stops reacting emotionally, that might be the moment the whales finally step in. Until then, they're simply watching.